other than that, they got the stops they tried to get the stops in the bonds and stopped right at the bars on top. And I was just looking at the S&Ps thinking, I don't know, Michael had this as a standard deviation move. It's a pretty good area down here just to trap the shorts early in the day, start going the other way. So then we had started a conversation about Powell this afternoon.
Oh, yeah. What time is he at? 12 o'clock? What time?
12:50.
12. Yeah, you know what? I better write that down. Oh, oops.
And the euros, they're buying dollars again. And, I was just, while you're in, I wanted to get your thoughts on, I guess the street's kind of split whether he's going to walk back the rate cuts or what he might do.
Well, I think the way the street is reading this is they're trying to base it off the Chinese. That if you get a deal here of any sort, that it'll make the Fed more reticent to cut rates. That they'll keep it in their holster, and I think that's exactly the way the market reads this. And that's the way they want to read it, and they're kind of forcing it. So that's the correlation that we've built in here, and you could see it play out all the time. The way that Asia deals with it is funny. It's like the Asian market, which was for a while starting to lead. I don't think it leads right now. Not to say that they won't be back leading. I used to be able to get some good keys off of it, but now, since they've been out and the major disruption in Hong Kong, there's some issues there. So they seem to go about their own way, and there seems to be some long-term profit taking. I think you could see it in the metals almost more than anything, because we saw it last week and this week and the week before too, where they're taking profits at night. And when it's like the first couple of nights when the Chinese were out on, when the holiday started, there were definitely some aggressive stop runners involved in the market, which is why we saw the move down to 1465 in the D's gold last week, and I know we talked about that. I was on after that, so because I think it was somebody took advantage of it. Angela. So that was really, really good. Again, like last night, the metals gold followed weakness upon where New York closed at, and then Europe comes in. And Europe is a buyer of the metal, which was interesting. That was probably due to Brexit as much as anything. And that's still, as I caution, it's a very hard read to be able to understand how this politically falls out. And we got the euro sterling cross back up to almost, did we go over 90 this morning? I think we did. Yeah, we hit 90. 90 was the high. So where it was trading well now is the market's highly confused again, although Goldman came out last night and was, not that means anything to me, it means nothing, because if they change depending upon who they're trying to sell to, they'll put forth an opinion, as all the big firms do. I'm not holding Goldman to a standard that the other ones, they always got somebody who's bullish, somebody who's bearish, and they roll them out. So last night they were bullish on the sterling, basically for the same reasons that I've discussed in this room, and people have we've had some fairly robust discussions about it, which is the weak sterling is actually as a safety valve for the British economy, which has been pretty much borne out because the British economy never slowed to the degree that all the naysayers from the June 24th vote of 2016, who were all predicting the collapse of the British economy, just haven't seen it. And a lot of it is due that the pound has acted as a safety release. Will that sustain forever? I don't know. But the Britain is certainly in a position where even U.S. companies now, U.S. private equity groups, with the weak sterling, are actually making sizable investments in Britain because the assets are cheap.
Ira, I have a history question for you.
Yeah, wait, hold on one second. I'm going to mute myself for a minute so you guys go talking.
Judd, thanks for letting me know.
Yeah, well, I was texting everybody, and except you, and then I realized I wasn't texting you.
Ira wants to hear what Jim Bianco has to say. I bet you.
Is that what he's doing? Yeah. Somebody's
Shit.
got their video on. I'm wondering if it's Ira on his telephone, but that's okay.
I'm actually taping this.
Yeah, we kind of got a double top in the footsie. You got to stop running the DAX and the Euro stocks, and now they're coming back up. You know, on the daily, right at the 50-day. You know, I think a lot of this is, you know, it's what we started to talk about, Matt, was how this was going to play out with the Fed this afternoon and how the markets would read it. And you can see this double bottom here at 96.5 in the SPOs from, what was that, from Monday? Or from last, whatever it was. Last week, Thursday, Friday. Yeah, from Friday.
Good?
Who, Ricky?
Yeah.
Yeah,
Bianco.
so, well, he got Jimmy Bianco, so I wanted to listen.
Bianco have anything to say?
In fact, I
taped it.
Well, discussing the effects of technology and so on.
Yeah,
on
it's a pretty generic. It's a pretty generic piece.
Yeah. So, Ira,
okay.
what I wanted to ask you, a history question. I was watching something last night, and the comment was made that prior to World War II, Shanghai was a financial center, as opposed to Hong Kong. I think Hong Kong maybe hadn't really come to fruition yet.
Different.
Does that sound right to you?
Hong Kong was a British colony, so it had a different role. Shanghai had a role within, of course, the Chinese state. You know, so it's just majorly different in that way. And China, you know, up until well, you know, you had the breakup of China by the group of eight, which is kind of funny, who all took a share. So yeah, it was, because don't forget, there's a street in, I've never been to Shanghai, but there is a street in Shanghai called the Bund. So there was a financial district, you know, it was, I think, anchored by the Germans. I'm not positive about that, but that's my sense. So yeah, it had some, you know, again, everything had to be financed. We know that up until the mid to later 1800s, you know, China was a significant player in the global economy, especially, you know, and so much so that it was the Brits, you know, who sought to punish the Chinese with, of course, the Opium Wars and the Boxer Rebellion and the depreciation of silver, because the Chinese had a silver-backed currency. That's why I'm expecting at some time when the Chinese do announce that they're going to harden the yuan, that it'll be a bimetal currency. I don't know when that'll take place. It might be a silver electronic, crypto. Who knows? But the Chinese have had a long history of using silver as a form of currency. So that would be a way to deliver a blow to the world at some point.
Yeah, saying that the French was the biggest influence in Shanghai.
The French were? Could have been. I don't think about it in the French in that way, but they were a major player in the colonialist period of the world. The French had major league colonies, but there were all 8, from Russia to the Germans, and the Germans were not big colonialists, but they did have some place in China, Britain, of course. The Austrian-Hungarian Empire. So they were all players. So yeah, it's probably right. That's probably right. It wasn't Beijing. Peking was just the seat of the monarchy. So
Don't forget the Irish.
I don't think the Irish were involved. They were too busy being repressed by the Brits. I'll turn to John Lennon's song. If I had the luck of the Irish, I would have no luck at all. It's a great song to talk about Irish repression. Yeah. No, I don't think the Irish were busy sending people out, but it wasn't for very good reasons.
No, they're true.
And McDonald's hadn't opened yet, so there was nothing for potatoes over there. So, what else have you guys been discussing?
We're just trying to figure. We were just thinking about the ramifications for, the possible scenarios for more volatility this afternoon at 12:50 when Powell speaks.
Yeah, I just don't know. What's the topic of his speech? I usually go and look because
I was listening to it on Bloomberg this morning early. And then everybody was, the conversation then my thoughts went to the banks for a trade later on today, depending upon whether
look at, I'm glad you brought that up, Judd, because if you look at the bank stocks, man, are they miserable.
Yeah.
I mean, they're miserable.
How miserable do you think the Germans are going to be now that some of their banks want to start dinging them for negative deposit rates over 100 euros?
Oh yeah, and again, as you can see, this battle, this is such the early stages of this, and Draghi has left her a mess. And the guns and the big guns are coming. And the FT editorial was just really. I had picked up my phone to cancel my. I've been ragging about the FT in this room for a long time, as I have in a lot of other places. But I almost canceled it after I read that editorial, and I said, "No, this is why I have to keep the subscription going, because I have to be able to read this stuff. I never want to get in the mindset where I'm only reading people who think in a similar vein, but that piece was so reprehensible in my mind, from so many different levels. I heard Gartman picked up the blog, which is fine, because I like Dennis, and but I didn't see. Somebody told me that he picked up the blog last night about it in his piece, so I got to go find my way to it. I don't get it, so I'll have to take a look at it. But it.
Shall not get it, or you? Sorry, that was a joke.
No, go ahead.
That was a joke.
Oh.
Everybody thinks Gartman is a goof because he's always on the other side of the market. Something's going on right now. Gold just broke $5. And
but that's what Zero Hedge did to him. Zero Hedge because Dennis made himself vulnerable on the trade issue. On trades, it put him in a bad situation. and I think in the algorithmic world where they were able to deconstruct all his trades, that there were people spent a lot of years being able to, because he had such a big following, deservedly so. He earned that following, but with that following, they were able. I really think they just attacked the stops because he would put out in his letter for years, how his stops were set. But don't underestimate Dennis's thinking ever. He's a really good thinker. I've known him for 25 years, maybe a little longer, and we have shared many conversations, many phone calls, chats. He is a very good thinker. You underestimate him at your own peril.
I hear you.
It doesn't make him the best trader. You know that. We got the wounds, we got the scars to prove it. There's not anybody who's listening to this who wouldn't say the same thing. I got multiples. I just don't put it out there for, where I've been, not like that, because he's a little, he set stops in ways I would never set stops. But we all are prone to it and subject to it. But it doesn't mean that the thinking's not right.
Ira, it sounds like he needs your technical analysis.
Well, he needs yours, not mine, but not mine. But I would advise doing something. And we've talked about it, But he went down that path, and it's worked. Listen, Dennis is phenomenally successful based on using his brain, and again, you sell him short in a very narrow-minded fashion. If you really look at his thinking in the big picture, it's pretty good. And he's really good because he understands how commodities trade. That's his background. He started it with cotton, and who taught him, Judd. I believe he worked for the Tullises at one time when he first started out, because he came out of North Carolina State. So he was down there. So I think that's where his first he worked for Cotton Incorporated.
Yeah, it was just that, I just had never been able to process the stuff because it was just too verbose.
Yeah. No,
I can't. I tried reading it a couple of times, and, I don't have time as either a trader or mentally to wade through all the stuff.
Yeah, no. It was really crafted, I think. Dennis isn't here, but for the bank desk, because they all had to have it. There wasn't. Every time I would go into a big trading bank, the letter would be sitting on the desk.
Well, he was the only one writing then too, so he was everywhere.
Yeah, and you know what? They had to have it first of all because it was good to talk to the clients about. He really served and filled a very important niche at the time. Prior to that, there was a guy named Gunther Reimann who wrote the what was the name of that? He started in the 70s. He was really good. He was out of Europe and understood everything that fell apart after after Bretton Woods, and it really had a good handle. And he had some ties into the State Department, but Gunther Reimann was a strong voice. But Dennis covered the world in a far different way. But he filled a very important niche, and he is a very good thinker. I mean, again, doesn't make him a great trader, but his thinking process is very, very high level.
Raz was the first one to show it to me, and
that's probably right.
Do this.
Yeah,
it's like, okay, great.
Yeah.
It's a name I haven't heard in a while. Hey, let me ask you. Can I ask you about?
Yeah,
all right. Well, my questions, and they're always. I always think that they're silly until you say that they're not. All right. So, how do you? How is this? A while back, we had spoken about, and I'm still thinking about it. A while back, you had brought up, and I did a little bit of reading on it, or a lot of it, that you thought that the U.S. was getting ready to ease sanctions on Russia because of the give and take between Putin and Trump. And then fast forward to what's going on now, and that's got to be completely off the table at this point because of the pressure that Trump's under from this impeachment thing that's being heard before. It's this Senate Intelligence Committee instead of the Judiciary Committee, which I think is interesting too. But I'm wondering, what do you think is going to be the long-term implications of the impeachment process on the way that Trump would be able to govern and the U.S. would lead or not?
Well, listen, everybody wants to look back to Nixon, but Nixon was different, and I lived through that, and as did Judd. So, and I was actually very involved politically. So, but almost in a way that, but in a much more intelligent way. Honestly, people really researched things back then rather than just shooting. Now you just send out something, and there's no substance or context to it. It's just to get it out there.
Right.
But Nixon was in a bad position because of Republicans. A lot of it was because, all the ill feelings from the Vietnam War, which rightfully so, and we were coming off of years of race riots in the country, so that made Nixon very vulnerable in a way that Trump isn't. Because I say he's vulnerable, first of all, because his own party was looking to cut from him. There was nothing to be gained by sustaining him, and he had kept digging himself deeper and deeper and deeper with the web of lies and the people who turned on him. And don't forget, Nixon was pretty much an outsider too within the Republicans. He was never liked. He was, Eisenhower's vice president, but he was never, a great standard bearer for the party. He was disliked immensely, but he knew how to win, and he did get the nomination, especially after Goldwater in '64 got trounced. So they had to turn to somebody like Nixon, as the Reagan wing went underground for a little bit because of the trouncing of Goldwater. But it was important to get rid of Nixon. The country was in a much more, I know this country's divided now, but it wasn't the same as with the wounds from the Vietnam and race. So it couldn't have torn itself apart. It would have been very disastrous at that time. These today are, the divisions are of a different nature. Where Nixon could not have governed, just could not have governed. I'm not sure that this is going to affect Trump in the same way, especially because McConnell has already said you're never going to get this through the Senate. Although yesterday's stupid action, which I couldn't believe when I read it yesterday about 4 a.m, that he was, he had advised or was going to pull all the troops out of northeast Syria and leave it to the Turks. I was aghast. It was such a.
It's a huge win for Putin.
Well, and it's an ill-advised. It's so this country, America, it's nothing to be proud of. Has sold the Kurds out. Going back to George Bush the first in the first Gulf War, they sold the Kurds out. They've been selling them out. And it's terrible. And here they were the ones. They're the ones who defeated ISIS because they were the army on the ground, and and they've solidified themselves quite a bit. Now you're going to allow that autocrat Erdogan to have a go at them. It was terribly ill-advised. Of course, he backtracked in a way which made it actually worse in the afternoon. I couldn't believe what I had to read that 3 times. I said, no, he couldn't have possibly have said that, but he did say it. A terrible decision, and I think, Judd, you're right. That's a huge. That's a huge victory for Putin. In fact, so going back to the initial question, of course, it actually enhances Putin higher, and it's in times like this that politically you pull stunts like that because you're trying to, especially Trump. He's nothing but the great distractor. Now, he will, if he makes this move and tries to make this move, he will meet. I knew I was having a bad day yesterday because I agreed with Lindsey Graham, so I had to rethink everything, and I had to question myself. I go, what day? Where am I? I've just really entered a nether zone. But Lindsey Graham was 100% right. Something must be going on about because the beans are on their highs too.
Yeah, well, Michael said that China signaled to make a comprehensive trade deal with the U.S.
Yeah, I don't know that you're going to see a comprehensive trade deal, to tell you the truth. You know, I talked to somebody yesterday with deep knowledge about China, and maybe the sense is that, and I understand this because this is let me say, do it by little bites, nothing comprehensive. Comprehensive is too tough. So you may just have to take little bites, just like they did with the Japanese on parsing together that trade deal. You know, there were some things in there, but it wasn't major in any way, shape, or form. So you might be better by taking little bites. And I have to tell you, for anybody who's an old CME trader, when I was on the CME board initially, and we were trying to do some of the changes that we knew structurally had to be done, my plan, along with Jimmy Olaf and others, was who had some foresight, was to do little things. So we ran a lot of pilot programs, because once people got a taste of it, oh, maybe this isn't as bad. Because if you do things comprehensive, you allow a vast array of forces to ally against you. I know that running one thing is not constant, but sometimes it's easier to do it by little bites. It's like putting headsets into the pits.
Great point. Look, they closed the life overnight. You went to work one day, the pits
Right.
were open, the next day they were gone. Gradually, little by little.
Well, and you bring that up, and being a life seed owner, I lived through it, and eventually got rewarded. But I used to talk with people there. But the life taught me that was a great lesson, because see, that was the same thing of getting the handhelds into the pit.
Yeah, that's exactly what I was thinking. That was the analogy I had.
Well, I'm going to tell you what.
Anybody to communicate, it was a joke.
Yeah, well, but putting those handhelds in, which was a pilot program, which I will tell you, Bill Shepard, myself, and a guy named Dave Dugan. Dave Dugan was the tech guy at the exchange, but Bill and I really ran the program, and we put them in on a trial basis because we learned from the life. See, the life made a grave mistake because they allowed their liquidity pool to be bifurcated. So they put some on the screen. They split the buns. They left it in the pit, and they left it on, and they put it on the screen, but they didn't let the two communicate. So so that taught me, if you bifurcate a liquidity pool, you were going to destroy yourself, and that's exactly what happened, because then Eurex swept in. They had a single liquidity pool and were able to provide far more liquidity. The life made, in my opinion, a lot of mistakes, but it taught me. And it prevented us from making some of those mistakes here. And I'll tell you what, we learned a lot from the SIBO too, because the SIBO had they were much more advanced at the time on handhelds, because they knew that they had to make them accessible to their floor traders, the guys who were actually trading individual stock options. So we learned a lot from them. And if you're willing to learn, it's like same with everything we talk about. Open up your eyes and open up your mind and learn a little bit, and think that you don't know everything. But I'm glad you brought that up, X, because that was extremely important. And again, it was the fact that we did not bifurcate the liquidity pools. And believe me, there were so many people opposed to them. I'm telling you, it was a standing joke with my wife and I what time the phone would ring at 10:30 or 11, with somebody would call me up and go, "You're, blah blah, deleted, expletive, deleted." But my phone would ring at all hours of the night, tell me how wrong I was, and you guys are destroying the place. And for some, yes, but the change was coming whether you liked it or not, and that's what you try to explain to people. But little bites. So I don't think you're going to get anything comprehensive. I'll be very surprised.
That's a great analogy, and it makes it make a lot of sense to me. But I am still fascinated and still very interested in the dollar's role in the world, and if the dollar's role in the world is going to continue to decline because of partisan party politics, or because of whether you like, defend, or dislike and hate Trump, in this whole impeachment process stuff.
Mm-hmm.
is this going to affect the role of the dollar? It looked like that we were, as I kind of mentioned earlier, that we were making headway with Russia and Putin, but now that's got to go out the window because see, all along he's been in bed with the Russians, or Venezuela, or Iran for that matter.
Listen, you cannot. The days of having. What was his name? Fareed Zakaria, who wrote, I think it was him who wrote The End of History in 1994 after the fall of the Soviet Union, and the Berlin Wall came down. That was all over that democratic liberal capitalism had won, and that's the end of history. Now everybody agreed. Well, we know how wrong that was, and the day of U.S. hegemony in the world, I'm sorry, if you're an American imperialist, you're going to find great offense to what I say. It's over. It's been over.
Okay.
And Trump, with Steve Bannon as his most closely advised advisor, that's what he came in and said to everybody. So you got to deal with it. And in that regard, I've always believed that Trump is right. The concept of imperial America, where they can dictate to the world and form the world as they see it, it's over. First of all, America has never been a good imperialist because it's never been, and I know people will disagree with this, but they've never been ruthless enough to be a real, as the Chinese would use the word, hegemon. Now, of course, if I'm Vietnamese, I'd go, what are you, stupid? And I go, okay, right. But you know what? Where others really would have, there would have been no debate in a lot of societies. I can tell you that there was a lot of debate. And eventually, listen, it forced Lyndon Johnson out, okay? So there was politics going on. It was not America's finest moment. But on a relative basis in history, the United States has never been a very good hegemon. It just, it's because you have that Statue of Liberty that stands there and warns you and advises you about what you are, so you never proceed with an absolute ruthless, as we've seen, whether it was the Belgium king in the Congo, whether it was the French in Africa, whether there's been ruthless empires. The United States, they've done stupid things, and it's caused a lot of misery in the world, but they didn't go in with the intent of being a ruthless director, whereas, in 1991, the war in the Gulf, which was about oil, the United States didn't seize the oil, nor, may I remind people, did they do what they could have done and destroyed the Iraqi army, the Iraqi Third Army, when, what's his name, General Schwarzkopf, advised pulling back and not destroying them, because they had them absolutely on that bridge. And I said, why aren't they, but it's not the way they operated. And yes, America as an imperialist is certainly left a bad footprint in the world, but it certainly is, by historical standard, has not been a ruthless dictatorship. It's just not the way it's operated. So I'm only saying that because the U.S. role of being the sole hegemon in the world, it's over. It's over. The world is far more diverse and complicated than people ever imagined, and doing it by threats of violence, it's not going to do it anymore either. So you may as well sit down and negotiate some of these things away.
So, Ira, I was just looking at a couple of charts here. I was looking at gold and euro. You might want to take a look at
that. All right, beautiful, Judd. Thank you.
And silver and yuan.
Yes.
Yeah.
They're all follow-up questions.
But that didn't take you assholes from the Boxer Rebellion long. Jesus, what are we going to be importing opium into? What are we doing?
Oh yeah. I probably feel a lot better.
Yeah, you would. No, I mean that's really so. What Judd is going into it was going to be my follow-up question about the dollar, and what's the haircut that we take, and where do we what's the haircut the dollar's going to take as the world continues to move away from U.S. dollar.
I've been emailing with a guy this morning who's out in California about it. He reads the blog and he sends me some of his stuff, and I take a look at it, but. I told him, because he's a little bit bearish the dollar, because he's talking about other countries moving away, and I said, I'm not bullish. You guys know it. I'm not bullish the dollar here. There are times it's like right now this morning I put the gold Swiss back on, so it's been a good trade for the moment, and I'll probably take some off, but it worked for a little bit. The dollar is, again, it trades around the Chinese news. But overall, there was an article out this morning. Who wrote it? I gave it some credibility. Oh, because it talked about the roles, many of what we've talked in this room, that a lot of what's going on in the repo market is due to the huge amount of debt that's being built up in the U.S. and the fact that the dealers are having to warehouse a lot of U.S. debt, which is causing havoc in the overnight funding market, because they have to go borrow cash in order, because they have to, in order to be a primary dealer, you have to, buy government debt. That's the way the government, that's the way the Treasury brings debt to market. So you have to absorb that. Well, if the banks aren't buying it for various reasons, and the dealers they have to go out and borrow cash. So there's a cash shortage at times, and there's really a rising sense. Oh, Liz McCormick's piece on Bloomberg this morning. That's who wrote it. Liz McCormick is somebody else. She's in London now for 3 months. I know from my daughter. So that they're looking more and more into this. Oh. There is no topic on Powell's speech. It's a moderated Q&A.
Okay.
Oh, good.
That's very important. Okay, yes. So I just got that.
Make sure our stops are in.
So, Ira, it's in my view, the dollar as the reserve currency and the hegemon,
yep,
I think will be fully completed and over, after the next financial crisis, okay, and B, when the renminbi becomes fully convertible and freely exchanged. Then, and I think then that will be the defining moment.
Oh yeah, but there's going to be great movement before that. Trust me.
Yeah.
Trust me.
And I think it would have to be after the next financial crisis, which I don't know, sometime in the next couple of years, maybe.
Everything he can not to have to put curbs on the renminbi worldwide. He does not want that to happen.
No, they don't want the renminbi, the yuan, or renminbi, however you say the renminbi, to be the world's currency. It'll wind up being some form of the SDRs, in my opinion. But what the hell do I know?
I'm not saying they want it to be, Matt. All I'm saying is when it becomes fully convertible and freely exchanged, then you'll have a sea change.
Okay. No, I get it. Yeah.
Yeah. But the change will be, I'm telling you, long before that. It's going on now. To a limited extent. I think that's why you see the Chinese playing with some type of cryptocurrency. When I say crypto, I'm not talking Bitcoin. Okay, I'm talking about a crypto yuan, so to speak, and that in order for that to gain traction, it's in actually an easy way, and believe me, you might see it done through blockchain, controlled by the People's Bank of China, but it may well be hardened by having a gold or silver component to it. Watch. It's very important. It's one of the reasons why, the Chinese opened up the gold market in let's go back to the original conversation here, Shanghai, which has now a very vibrant gold market.
And they bought
and it's
100 tons last month.
and it's priced in yuan.
Yeah.
You know,
Yeah,
and they have.
I agree with that. You know, they could use the digital currency that you're describing as a means of buying and selling goods and services amongst themselves. All right, and then maybe once a year, twice a year, they settle up in hard currency, i.e., gold or silver.
Mm-hmm. Well,
What about
listen,
gold for oil?
Instead of shipping, you know, precious metals back and forth all the time,
right.
they just use the digital currency as an intermediary.
I agree with that. That's exactly right. And listen, the fact that the Russians are taking yuan in exchange for oil,
Yes.
no small thing.
Oh.
So you know, this isn't a conspiracy. We're not talking conspiratorial. We're talking about things that are actually going on in this world, and to be attentive to. Because again, you know, I was sitting here with my friend Norb this morning, who sits next to me, and we always go through the world, and we're talking about these things. You know, the world it's changing, and the problem with television is they can't show you a picture of this, and it's not going to show up in a tweet. This is a process. And the one thing that television can't do is process. You know, which is why, you know, there's a famous comment, you know, I knew it from what's the name, the black comedian who said, you know, the revolution will not be televised, but it came from some rock and roll lyricist I know. But I used to hear, what's his name? I can picture him. I can't remember his name, senior moment. But these are things of process, and that's what when I'm at my best and when I'm doing well in analyzing global macro, I'm understanding the process. And now that I'm on Norb, I'll tell you something else. He sends me pieces. There's a piece from this guy Morgan Housel. If you guys can find it, I have it, but I'm not going to send it to you. Oh, I could send it. It's in the public domain. There's nothing private to it. Hold on, I'll tell you what it is, because it's still sitting here on me. Morgan Housel, Housel. You guys should all make yourself aware of Morgan. And it's the latest piece was 3 big things, the most important forces shaping the world. It came out over the weekend.
I got it. I found it already.
You got it?
Yeah.
Yeah. His stuff is really good. This is a guy who really thinks, and he writes well, so it's eminently readable. But it's really he talks about context, because here's his opening gambit. Here's an example. What caused the financial crisis? Well, you have to understand the mortgage market. What shaped the mortgage market? Well, you have to understand the 30-year decline in interest rates that preceded it. What caused falling interest rates? Well, you have to understand the inflation of the 70s. So it's really good stuff, because, again, I can't stress this, and you guys will hear it from me until you're choking on it. But the one thing that I pride myself on, and I hope you guys are taking from me, and I have a sense that you are, is that we have real intelligence. And real intelligence means that our edge, the edge in real intelligence, is nuance and context. I will not stop hammering on that, because I wake up in the morning, I go, what is my edge in doing what I'm doing?
That's what separates us from the algos.
Exactly. Nuance and context.
Looking for one tick. They don't care.
No.
Yeah, and it's like, you know, it's all price. You know what? Price is important to me only as a P&L entry. And you know, meaning that it controls, you know, it sets my risk and allows me to enter points because of that, based on that risk factor. But ultimately, what we're striving to do is put context and nuance. So when these damn headlines come, and they're all crafted, you know, the whole tweeting world now, they're now all talking about how the greatest thing is to trade on Trump. Oh, really? Gee, I thought we were discussing that. Now they're talking about it on CNBC like, oh, you just woke up to this?
God. Judd, you and I have been trading off of Trump now for 2 years, especially on Wednesdays. And the best one of them all, that very first Wednesday in May of 17, I think it was, where, I don't know, the Dow was down 500 or 1,000 points, and we like bought the shit out of it because it was a freaking joke, and it was a gift. Absolute gift. Trading off of the headlines like that and the algos. And it bounced right back, remember?
Oh, yeah.
I think I started calling it Impeachment Wednesday.
Well, how about what? Wait, we can run a better. We can run knockouts. We can set up option knockouts on the time that Kudlow is going to be rolled out to speak positively about something.
Yeah, there you go. Well, and the one Matt picked up the day that somebody bought, $1 billion plus notionally worth of futures before they announced a potential China deal, and we rallied 110 points in the S&Ps.
And right. When was that? Last Friday? There was that? Come on, you know what? It's CNBC's just waking up to this.
I can't even watch it anymore. These guys are about to launch. I can't even turn it on.
You know what? I do a lot more Bloomberg in the afternoon.
And
Bloomberg Radio, because all I'm doing is really listening for headlines. And in case somebody comes out and has actually something interesting to say, but that's a rarity. It's drivel. It's Kramer in the morning. I don't know. You know what? I used to be able to glean something from him, but he just wants to lock up some historic. What was he beating on this morning? I was kind of laughing. He was about the Chinese with the NBA, and what was he bringing out? Really, that's a significant story to me. It's not much of a story. I know that if I lived in Hong Kong, I'd probably think differently, but my headline would have been I actually wrote one yesterday. If I ran the headlines for Fox or something, my headline would NBA caves to the almighty yuan, because we used to read it as only being concerned about the almighty dollar, right? So we'll change that game. I mean, some of these you could just write yourself. It's just or they write themselves, I should say.
Yeah, I mean, I watch Tom Keene in the morning at 5 when I wake up on my phone.
Yeah, that's right.
Surveillance, sit in bed and watch him.
Yeah, Tom's pretty good, and he lets his guests actually talk, and he sits back and listens, and then if he's very knowledgeable, he pushes back, which is good. Yeah.
LaCroix's good. She's really bright.
Yeah. Yeah, I'm not happy that we don't get more Kathleen Hayes, because she's always been one of my favorites.
So here we are, another faded rally.
Yeah.
We'll see what happens later.
Yeah, they'll bring something else out soon. Hold on to your hats. It is. You just sometimes step back, and so what are we? So and then of course the South China Morning Post, which is now my much better go-to read. Oh yeah. Because you know what? I'll just skim the headlines and I go, okay, that made me, and I'll read those stories, because the FT is really, and the editorial the other day really solidified it. When I read it on Sunday morning, I truly couldn't believe it. I walked into yesterday morning after I read the Trump headline on 4:00 Monday morning, and by the time I got to the desk, between the piece by the 6 high-level European economists and thinkers on Friday or Saturday, which I read and was a really good piece, and then I read the FT editorial response to it, and then Trump's. I mean, I was just fuming. I go, "Wow, this world is just so stupid." So my dear daughter had sent me a piece. She goes, 3 things I'm thinking about. And they were all the 3 things I was thinking about. So I said, I said, you and I have been with each other too long. That's not good. She says, yeah, I knew you'd be by. I said, yeah, the Trump thing was really set. I just couldn't even believe it.
They're plagiarizing stuff. It's sensationalism. They're putting stuff out that everybody else is putting out. They have it out. And it's no longer the free-thinking, investigative, journalistic paper that it was.
You know, I'm telling you, outside of John Desired and Plender, Gilly and Ted, I still will read. There's really not much, but I have to read it because I know now that they're on so far on the other side, I have to pay attention to them. And it's not they're not really that relevant because I still maintain that Reuters is the leak source for the ECB, or they were under Draghi. We'll see if it changes under Lagarde. And you find other institutions as a leak source, you know, for the Trump administration. But I came so close to just picking up the phone yesterday and send, because I just re-upped my subscription for the online FT. I don't even get a hard copy anymore in August, so I was going to have them just, you know, credit my account and.
Well, Ira, they gave it to me I got a $199 special, and I
now I'm really pissed.
That's what he told me that this weekend, and I wanted to throw a coffee cup at him. I was so pissed off.
Now I'm pissed. I paid $375 for the year.
Me too.
Well, I get the $199 special. I told them I would not re-up unless they kept giving it to me, and they do. So
yeah, I did that with them a couple times. I think I ran out of goodwill. I argued with them. Actually, they're did I just send? Oh, I just sent it to you, Matt. The Liz McCormick piece. It's a really good piece on the repost. And that's, again, we have to come back to that. And, you know, it is, I ran the 2.5 and the 2.10 charts this morning. Those formations, I ran them on a 3-year chart with the 200-day moving averages, and they look interesting. It's early in this game, but they're interesting looking charts.
Do you still have the steepeners on, or are you adding to them?
I just put some on because, you know what, I won't work at all tomorrow, and I won't be attentive. So I put them on. I legged into them this morning, so I have them on at decent. I just put the 2.5s on because when I look at this 2.5 chart, which is at -8. Now, when I look over the 3-year period, back in 2016, it had a high of 80, almost 84, and now we're at -8. And the 200-day comes in at -3.5. The 50 days at -8. So we're a little bit above the 50-day. I'm probably a little bit early here. I don't have a committed position. I'm just, you know, sending out some probably some recon troops that are never coming back.
You're gonna sacrifice a couple of soldiers to.
I am. I'm sending out some McLennans, as we call them.
Ye with little faith in the 30-year. Ye with little faith in the 30-year.
Are you getting that off of Bloomberg, Ira, or were you?
Yeah, I get that off of Bloomberg. Unfortunately, CQG does not do the yield. In fact, we were talking this morning. I got a call over there. They need to really up their for what I pay for that system.
But they want you to buy the canner feed to get it.
I know, and I give them
$1,000 a month.
I give them enough money. What do they want?
I got a bill for $1,700 this month. I almost threw up.
Oh, that's my bill every month because I got so many add-ons.
Well, I get it all delayed now, all the European stuff, because I don't trade it. So all I need to do is really see the charts.
Yeah, but I get all the cash, you know, because I have to have them. It's the way I've operated, and it's what I'm set up for. So I can't figure out what I would cut out yet at this point.
And Ira, you haven't even seen it. You see we have the open high-low last. They're not going to support that anymore.
Really?
No, yeah, they called me up from Glenwood. Joe called me up and said, "Oh, by the way, we're not going to because all my deltas were off because when they went to the this new version."
Yeah.
And these guys aren't going to support it. They want all horizontal stuff. And I go, oh, great. So you're not going to support it when you call me when you're not going to support it, and that's when I'm done.
Yeah. Yeah, I know. Now, see, somebody just sent me a piece at, what is it, the Global Times. CNBC was quoting China sincerely looking to reach a comprehensive trade deal with the U.S. I don't even know what that means, but there it is. And the market turns on it, or it tried to anyway.
You know, it also faded it. So I'd much rather. I've been looking at the South China Morning Post all day long, waiting to see, and all that's putting out is China tells U.S. to reverse decision to blacklist Xinjiang tech firm. I'm sure, Michael, I'm butchering that, so my apologies.
Yeah. So, all right. So that's the world in which we're lying in wait right now. So, but you know what? So, I really think that coming into last quarter, and last quarter we know what happened. You know, and then the conversation, of course, rates going up, and now we're not in that quarter. But I think if you did see any type of trade deal, any type, whether it's even minimus, I don't think the Fed. I think it would give the reason. It would give the Fed a reason to pause in October, because I can't believe how many people are really. I'm not looking for a cut necessarily in October, unless the trade deal totally falls apart and things really start being challenged. Because what's the sense that if they do come to some type of agreement, then you may as well wait and see the way it plays out. I wouldn't be in a hurry. And this idea of always having to placate the markets is just a terrible, terrible way to run monetary policy. But I believe, and I've believed for a long time, that that's one of the negative, that's one of the collateral damages from forward guidance, which I've never been a fan of. I know where it comes from. I've read the academic literature on it. I've disagreed with it as a markets guy. So, and I thought the Fed and other central banks were cornering themselves, which I think if you look around, it's exactly because they run forward guidance, paints them into a corner, and then they don't like it when they disappoint the markets, and the markets punish them. You know what? The markets are only punishing themselves. Let them punish themselves. You cannot affect monetary policy by being fearful of markets. Honestly, it's fiscal policy that should be fearful of markets, because that's what the concept of bond vigilantes was all about, which is that, hey, you run irresponsible fiscal policy, your bond yields are going to soar. That was what bond vigilantes did. You run a, quality fiscal policy coupled with a responsible monetary policy, you're going to be able to borrow at better rates than anybody else. That's the whole concept of quote unquote bond vigilantism. That they were the guardians of the global system. We've come a long way from there, but that was really the basis of it. Now, it has nothing to do with it. It's all about there are none, because of course the central banks destroyed any of the bond sellers, anybody who could possibly try to stand in the way of what their actions were by saying, no, we think you're acting very irresponsibly. Who the hell would want to buy this debt? Everybody's got run over. Yeah, Bill Gross and Jeff Gundlach. Yeah, the greatest sale in the world is a blend at 25 basis points, as we made our way to negative 70. No, it's not, but that's where markets lie right now, and that's the disruption. And now it is. It's almost like with General Powell, not Jerome Powell, but advising that, hey, if you go to Iraq, you break it, you own it. Unfortunately, the central banks of the world own the bond markets until there's absolutely a buyer's strike. That'll be their worst nightmare. Whenever you say, "Yep, I don't want to buy it anymore. There's no yield here for me. Go ahead, you buy it all."
Ira, is that the moment in time where the lender of last resort becomes impotent?
Oh, that was, yes.
Yeah, well, you already have that in Japan.
That's MMT.
Yeah.
That's what because then they'll have to, and then it's absolutely the bank funding the deficit. There's no pretending that. And I just sent you the, Matt, I just sent the Liz McCormick piece. So.
I've got
And
it.
if we think the repo market's got problems now, the plumbing has problems now, wait.
Yeah, that's exactly right. She really wrote a good piece and you have to think about it because, listen, I'm from the school, and until otherwise proven, that debt and deficits do matter. I'm not talking about it as a trader because that's a losing proposition, and I respect again Keynes's great line that markets can remain irrational far longer than I can remain solvent. I don't put food on my table by fighting markets. Never have and never will.
That's a good point, Ira.
Well, you got to trade the market that's in front of you.
That's exactly right.
Ira, Judd always says, do you want to make money or do you want to be right?
That's right. That's exactly right. Because you know what? At cocktail parties, you can afford to be right. As a daily trader, being right, yeah. As I say, if I'm right, the P&L will take care of itself.
That's right.
But I'm not. You know what? I'm not. I didn't make a living fighting markets. It's not my style. And then waiting for them to come back and nope.
Judd, it seems to me like there's more money going into cash than there is into bonds and gold right now.
Yeah, that's probably right.
Yeah.
People are nervous. I'm telling you.
And they're buying dollars because they're just stashing it right now.
They are stashing currency. And you know what? And that's why we're going to electronic currency. Believe the academics like Ken Rogoff and Summers and others who are in favor of electronic money, because it's all about preventing you from stashing.
Yeah, this instant taxation, and you can't tax, and they can track everything you do.
Well, better than that, you have electronic money, you're not stashing it. Because, see, I can't go to -5. You notice there is a level that they know that negative interest rates, unless you're Swiss, that's a PhD thesis, dissertation waiting to be written. If I had any energy, I'd go back and finish a PhD, and that would be my dissertation. Is what the Swiss have pulled off here. But I'm too old and grumpy. But they know. See, if you had electronic money, I can take interest rates to -5% because there ain't a damn thing you can do about it. You can't stash it anywhere.
Well, then they better take everybody's guns away too.
Well, you know what, people? When I say this to people, and I have this is a real conversation, and it's not about politics. It's about markets and the effect of markets, but. They say, "Oh, you're conspiratorial." I said, "No, I'm not. Understand this, but the only thing that stops them from going more negative is they're afraid that people pull all their money out and just stash it, or they'll convert it to gold and go, I'll sit out here or gold and I'll let somebody else hold it." But there's all kinds of ways that people are trying to circumvent this, as you see in Germany, the pushback on any commercial banks. Charging people money for putting money into a bank account.
Jeez.
Go ahead. Tell me how much you're collecting on your savings and checking account at Chase or Bank of America or Citi. They're not paying you anything.
No.
And Charles Schwab going to zero. You can trade for zero. I know what that means. Again, I'm going to quote Shoshana Zuboff from the age of surveillance capitalism. If it's free, you're the product.
That's right.
You think about that.
I never heard that line before.
Oh, it's all over the book. If it's free, You're the product. And you know who taught me that? Momo.
Yeah.
I'll fill your orders for free. No,
Yeah.
you won't.
Yeah, because he was making.
Yeah, that's it. You don't have to mention. You don't have to mention any names. But Momo taught me that. I looked at him. I said, "No, you won't."
No, that's very funny.
No, it wasn't funny.
No, I know.
Not what they were doing. No.
What about?
I knew what
Buddy?
that fallout was going to cost me.
How about Buddy Furman?
I talk to Buddy every once in a while. It's fine.
Whatever happened to him?
You know what? Don't worry. He lands on his feet like nobody ever saw.
He's a weevil. Weevils wobble, but they don't fall down.
He's a good guy.
He's a good man. You know what, Buddy and I have a very good relationship. So
great trader.
You know what? He was one of the better cattle traders I ever saw. He really feeder cattle. God, when he was starting out, I was a clerk on the floor, just manning the telephone. I used to read a book and stand there and count how many cars he would trade a day.
Great
I would
trader.
laugh.
And you're right, and a great example of how if you really truly do your homework and you really do truly work hard to become a great trader, you will land on your feet no matter who, what, or what, no matter what the circumstances stacked up against you are.
Yeah, well, because you know what, it gives you good habits that a lot of people out in the business world don't have,
or anywhere.
And that's or anywhere. And that's the ability to say, you know what, let me step back from this and go, you know what, I did all this work and maybe I'm wrong. And you know what, again, it's knowing that you have to have an out rather than just keep digging yourself in deeper. And it's my problem with the academics who run the show. They just dig. And what's your out? And the problem with every central bank in the world is they have no exit strategy. The Japanese have never had an exit strategy. Bernanke never had an exit strategy. He talked about one, but he never really had one.
What was the exit strategy that he talked about? I meant to ask you that, and I'm glad you brought that up.
Watching paint dry.
Well, they would just roll down, and the system would self-correct for itself from there.
Right, but I don't see how that ever was.
No.
It just never made any sense to me.
It sounded good. And they wanted to believe it because they were going down a path. You know, again, they got stuck in the 30s, but they became extremists about trying to divorce themselves from that ever happening. You know, so in the blog for years, you know, I call Bernanke a 37er because he's trapped by it. And they went to ridiculous extremes. Again, you know, I argued with Santelli about QE1. I absolutely thought QE1 was necessary. I thought, as I wrote last night in the blog, that when Draghi went down the path of saving the euro for what he was trying to do, whether in the big picture I agreed with it or not, doesn't make a difference. It was right, but they didn't know when to stop. They were never willing to allow the markets to absorb it and deal with it and maybe show them by the way that capital would react. No, they were afraid of that, so they just kept pushing, and now it's so big that really they don't know how to get out of it. I know the Europeans actually have a better way out of it, but I don't think it's politically doable. But
the Eurobond?
We'll see. Yeah. We'll go back to that piece that was written a couple weeks ago. God, it seems like forever ago. They're going to. That has to be Lagarde's mainstay here. I just don't know if the politics have turned, which is what that FT editorial is so devoid of. They have no understand. They don't want to understand. They don't want to understand.
What would the U.S.'s answer to Europe's Eurobond be?
That's a very good question. We don't need it. We have a U.S. Treasury.
I mean, we have a unified banking and financial system.
Right. It would just be unlimited QE.
Well, yeah, and that's what I know that, Angela, but that's what I was getting to. Is it unlimited QE, or is there a point where the system does self-correct? Well, there is no self-correcting at this point because of the amount of debt that we're buried under.
Yeah, they just won't let it self-correct. It's just they won't let it.
Ira, it took me a long time, based on all the shit I was taught when I first came into this business, but I've come to understand that the whole financial system at this point really is predicated on confidence. And the moment that gets lost, or the Fed, the Fed has to exude confidence and come off like they know what they're doing.
Yeah.
If they don't, oh my God.
I
can't imagine what would happen.
100% right. That's right. And that's the world of the fiat currency. And
I never realized, the degree to which the whole confidence props up this whole thing, this whole farce.
Well, and it's the argument, and it's been an argument I've had, because you turn on the TV, financial news, and they're telling you that gold is an inflation index, and I say no, it's not. It's not. It's not. It may be a barometer at some point, but it's not. It's based on the concept of central banks, and that's when Paul Volcker would, famously say in conversation that gold was his enemy. I understood what that meant in the 80s. I understood that gold was, if you're a good central banker, gold is your enemy, because I've always looked, and that's why I keep a gold. As much as I love the S&P bond chart, the gold bond chart is, and I'm talking about the 30-year, because they're both psychological barometers that are totally devoid of reality. Now, you may say, what the hell does that mean? Well, I mean, gold, what is it? I know it's a hard asset, but it's a measure of people's psychological feelings, good, bad, or indifferent. Same with a 30-year bond. I mean, how can you buy a 30-year bond? I don't know what's going to be in 30 days. So they are measures of the psychological state of our world. Both of them. Both of them.
I'm going to ask you, and this is conspiratorial, but I'm going to ask you anyway because I've been wanting to ask you. Is there any circumstance that you can see in any way that the U.S. can go back onto some sort of an asset-backed standard dollar currency?
Well, that's a very good question, and the answer is yes, if you're willing to bear the cost, because the initial cost will be a deflationary period. There will be, that's the problem confronting Europe right now. Because if the ECB were to implode, it would be, the first reaction would be a phenomenally, I think, deflationary impact on the world. Now you'd say, but that would be positive for gold, because the gold would start looking towards, well, how are they going to get out of that? Because if you accept this premise that I'm going to throw at you, which is central banks fear deflation more than they fear inflation. Anybody respond to that?
I'm busy writing it down.
I agree 100%, Ira.
Yeah. Well, and it's taken us into this period because for 10 years, that's what you're seeing. When they all talk about a 2% inflation target, they don't fear inflation. They fear deflation. Because the flip side of that, they always talk about inflation's not high enough. Inflation's not high enough. Inflation's not high enough. Inflation's not. Volcker said, you can't hit a number like that. You can be 1/10 over. You can be 3/10 under. What's the difference? You can't keep setting monetary policy. And Volcker said that just recently. I'm sad because I think he's going to pass soon, from what I hear, and it'll really be the end of a great era. He doesn't get the credit that he ought to get for what he has accomplished and what he did. But you have to understand that as long as central banks fear deflation, we will exist in this world. And it's an asymmetric response. When they talk about that they're symmetrical, no, they're not. Because they fear deflation far more. And in deference to the banks, they're not wrong for that. They have to, because we live in a debt-based society. See, once you get away from a hard asset society or hard money, you're living in a debt world. And a world that's saddled with a lot of debt can't tolerate deflation. That's the lessons that Bernanke took from his study of the 1930s, that the worst thing that can happen in a debt-based system is, of course, to embark upon deflation.
So then, now, I lost my train of thought.
All right, so I got a question for you, Ira, that's not on this. The gold bonds, are you using PIT or are you using all sessions? So the PIT looks like it goes back to 76.
Yeah, you should use the PIT just to get that. If you use the other, you know, it's a limited picture, but let's see what I have up here. I probably have the electronic because I'm stupid, but
I mean, I just put up the annual. I mean, that's unbelievable.
Yeah. Hold on. But I mean, it's just, and it's like one of those, it's not that I'm going to tell you it's a great chart, but it shows me a lot because, again, it's a measure of the psychology of the marketplace. Here, I have the one that goes back to 1992.
Okay, so that's the all session.
Yeah. So August 1992. But you see, I'm not going to screw with it, but you know, I just look at it. It's not like I do anything major off of it, but it does give me a picture, actually an interesting picture.
I mean, Ira, going back to Matt's question, right? I mean, sure, assuming that there's still gold in Fort Knox, right? They could revalue it from whatever it is today to, say, $10,000 an ounce. Okay, great. But then the money printing and the deficit spending would have to almost stop, right? And that would be the deflationary trigger that you're talking about.
Correct. And everybody would get very fearful and turn inwards. You know, that's the problem that the ECB faces. Because right now, see, this is what Draghi did. And it's done intentionally, by the way. Don't, you know, and that's not conspiratorial, but they know that they could, the more they kept pushing, the bigger it got. Again, you know, as I like to compare it to the scene from the Bronx Tales, when the motorcycle bikers come into the bar.
Now you can't leave.
Now you can't leave, and nobody can leave, and the whole world is captured by it. The whole world is captured.
That's a great point.
Because if the ECB were to somehow fail here, wait, hold on, let's see what Santelli's talking about. That's the only reason I watch this. Oh, he's talking about the 30-year bond. Let's see. It's like he's listening to the conversation. I'll go drag him off the floor. He throws out Psycho too much, but that's a different story.
Well, he's got to dumb it down a little bit, too.
Yeah, he does. I know. Yeah. Okay, nothing much. So, what were we?
Let me ask you real quick about the central banks fearing deflation. So, but doesn't that take us back to chunk by chunk, small little bites? So, haven't we had, at least in the dollar, hasn't the dollar been deflating little by little and losing more and more of its value over the course of time?
That's not deflating. That's actually the destruction of fiat currency. So it buys less. It's not. That's the effects of inflation.
But doesn't that lead to deflation ultimately?
Well, it all depends how you deal with it. If you're an MMT person, just print more.
Yeah, that's the problem.
And if you can't cover your debts, the best thing you want to do is create inflation, because then you inflate away what you owe. That's what the illusion. That's what they call I think it was Irving Fisher called the monetary illusion. Because if inflation's going up, and it's like what's going on with the American, working class, they haven't gotten a raise in 35 years. They've been maybe keeping up, but so even though you're making twice as much in nominal terms, your money buys less and less.
Yeah, the guy driving home in 2005 or 2000 in his new Cadillac, thinking about what bottle of wine are we going to open tonight, and what steak should I grill, and who should we invite over. Still driving that same Cadillac, and wondering, well, what are we going to eat tonight, and what bill are we going to pay? What bill can we get away from paying next month?
Yeah, no, that's right, and it's a very important measure about where you think you are in this realm. But again, if you're a debt-based economy, you cannot afford deflation. Just a fact. So now that's my point when I say that people who buy 5, 10, and 30-year U.S. debt or anywhere else, you're a moron. Because if the bank's mission is to create inflation, right? Right? They're telling you, we want to create inflation. Yes. Why would you buy a debt? These yield curves ought to be steepening just by default.
Ira, this conversation kind of harkens back a little bit to the article you quoted earlier when you said, to understand X, you have to go back in time and understand Y.
Well, good point.
X and Y. So, Matt, the question you just asked, right, is when you understand that the system is rigged to take from savers and give to creditors, right? It's been going on for a very, very long time, right? And it also helps you to understand, well, where does income inequality from? Well, it's being taken from savers, okay, and given to creditors. So to understand income inequality, you have to go back in time and understand how the system is currently rigged.
Well, listen, and
that's just partial. It's not the whole thing, but it's a part of it.
Right. I get it.
They say that. It was amazing to me. They say that in the FT editorial.
And what? Nobody believes them?
Was that the one written by Muhammad Al-Arian?
No. This is the one that occurred yesterday in the FT. Where they defend everything Draghi does. Okay. The ECB.
Ira, I think most market practitioners probably understand what we're talking about, but unfortunately, the elites, the globalists, the politicians, all of them, they don't give two shits.
No, because it's nothing's. You know what? There's no price to be paid as of yet.
Not for them.
Yeah, as of yet, exactly.
Here, they're quoting from what the former central banks wrote. Here, I'm quoting you from the article, from the editorial. The ECB essentially justified in 2014 its ultra-loose policy by the threat of deflation. However, there has never been any danger of a deflationary spiral, and the ECB itself has been less and less a threat for some. Has seen less and less of a threat for some time. This weakens its logic in aiming for a higher inflation rate. The ECB's monetary policy is therefore based on a wrong diagnosis. That's what the former central bankers say. But the editorial says the ECB declined to comment. Okay, supporters of the central bank rejected them and point out the main objective has always been to achieve inflation of close to 2%. Allies of the ECB also pointed out that without the central bank's efforts, both growth and inflation would have been significantly lower. Okay, so we have our counterfactual, which you can never prove. Okay, so then they talk, okay. Many of the former central banks are well known for having a hawkish view of monetary policy in opposition to the ECB's position. But the group said its memo also had to support, two other guys. It added an intent to protect heavily indebted from Verizon. The former central bankers also warned that negative interest rates would favor owners of real assets and create serious social tensions. The young generations consider themselves deprived of the opportunity to provide for their old age through safe interest rate bearing investments, they wrote. The search for yield boosts artificially the price of assets to a level that ultimately threatens to result in an abrupt market correction or even in a deep crisis. So then they go on, the editorial says this: while the memo said the ECB's unconventional monetary policy helped to overcome a severe recession after 2008, it warned the longer the ultra-low or negative interest rate policy and liquidity flooding the markets continue, the greater potential for a setback. So they cannot come to terms with, they actually say in here, what's the line? I got to give you the line exactly. But history, it's at the true risk both to the. Oh shit! I got the wrong page in there. I'm sorry. Let's see. I screwed this up. That's why I made a mistake. Mandate is a policy that is too tight. The memo disregards the fact that the last time monetary policy was tightened in the Eurozone, it helped tip the economy into a second recession. That was true. The memo ignores the fact that low rates are a global phenomenon. That's also true, but it's really spared by the ECB as much as anybody. Let's see. Here, okay. Behind a veneer of economic and legal argument lies a partisan attack. The memo is unconvincing in light of the ECB's mandate to support all Eurozone price stability and the EU's other economic objectives. It makes more sense as a camouflage fight for the interests of savers against those of borrowers. That's what they're writing off the group of six to, that they're more concerned about the interests of savers. Well, I'm going to tell you what. It's always an issue, again. That's why it's political economy, because you have to figure out who is getting screwed. The whole tax system is about screwing somebody, right? That's fiscal policy is about who's going to get screwed. You get a tax cut. Somebody. Why do you think this stuff gets written at 12 o'clock at night when nobody's looking? This is the basis of it all, and it's all about financial repression. They did the same thing after World War II when all that debt had to be repaid. They squeezed, but the global economy was growing because of the massive devastation due to the war, so there was enough growth to sustain it. But they screwed, when inflation started really rising in the late 40s, after the war, they were holding interest rates down because if rates had risen, in regards to inflation, they never would have been able to repay the debt as quick as they did, or to start cutting into it. So these are all.
I've got one question here from Mike. It says basically the negative rate forces consumption of luxury items as investment for the only potential source of store of value. Further limiting gains to the elites, and again kicking the can down the road. Can down the role of the slower fool theory to more alternative asset classes. Is that correct?
That's 100% correct. I agree with everything Mike said.
Yeah, art, jewelry,
right? Automobiles,
jewelry and automobile, rare automobiles.
Gold and silver.
Watches.
Yeah. But that's absolutely the case. So who's able to? That's why you've seen the disparity of wealth grow. And people who want to argue the counterfactual of what the Fed and the ECB have done, they like to conveniently leave that out of the discussion. But there is a price to be paid. But it all comes down to this. That's why I'm watching these yield curves. Let's bring it back to a market sense, because again, as I'll be the first to tell you, if we can't make a trade and get a trading concept out of it, it's all gibberish. It's all gibberish, and then it's nothing. Then we can go meet at Speaker's Corner, or we can meet on the streets of New York at Central Park and just scream at each other and yell and try to convince somebody. But then it's just gibberish. But it's a way in which we will craft out what the world is bringing to us. And again, I think this whole ECB thing is just starting to heat up. Now, if it plays out with a humongous fiscal policy in Europe, well, then I think we know what to do. And we see little bits of it. Like there's certain days here where the European stock markets have, performed much nicer than the U.S. And that was even in the face of those of the WTO rulings. So things to watch. That's really as we head into this fourth quarter. Again, to quote Buffett, which I often don't do, not to say he's not a very brilliant financial guy, he is, but we're going to find out who's swimming naked pretty soon. And the greatest losses may be in the bond market. Now, I'll end this conversation because, again, and I've advised this before, those who want to compare to Japan, I think are making a severe mistake. Just for the reasons that we've really talked about in a lot of this conversation. Because when the Japanese went into their downturn, the biggest debtors really were Japanese corporations. Individuals in Japan did not carry and take on a lot of debt, which is why they could live with deflation, by the way. Because if you're not in debt and you own bonds, even bonds at 10 or 20 or 30 basis points, but prices are going down on any measured basis of 1.5% to 2% a year, you're doing beautifully because you've now got a real yield of 2.5%. If you live in, if you're in yen, if you own bonds, and 97% of bonds initially when this all started were owned by Japanese investors. It was the debtors who got crushed, so you had property prices drop dramatically, and it was a global phenomenon because the Japanese had invested so much money around the world as their currency ran rampant. So I read Krugman's stuff on the Japanese deflationary period is really good, but do not fall into the trap of allowing those to compare Japan to what's going on in the U.S. and in Europe to Japan. It's a bad trap to fall into.
All right. Well, thanks, Ira.
We covered a lot of ground. I will be out tomorrow. So everybody, thank you. And if Robert's on, thank you, Robert. It was a beautiful bottle of wine.
Yeah, he's here.
Oh, well, thank you.
I was just looking for my unmute button.
Yeah. Yeah, it was really, really very nice, Ian. And I told you when my grandchild is born, that's what we're going to open and drink. So I'll be thinking of you. Thank you, guys. Enjoy the day. Any other questions? You know what? You can get them to me either through Matt or Judd. They get to me all the time.
Hey, Ari, I got one more question for you. How do I say this correctly? I looked it up so I can say it. I said it to Judd this morning, and he laughed at me. Is it Gamar Tov? Gamar Tov?
Yeah, perfect. Yep.
Really? Okay, good. There you go.
Perfect. And that just means that you should be sealed for a good year because everything's already been decided. You got a couple more hours to impact the way the world is, the way you've been judged to the world. So you hope that it's a good sealing, that you've been, health and prosperity and whatever. But it's what you push for.
Back on Thursday morning, they haven't let me out.
Listen, they could tie a stone around me and just send me around in a circle like in Midnight Express. It's what it feels like a lot of times anyway. All right, thanks, and thank you. It's very nice.
Thanks.
Okay, all right.
Ira.
Thanks.
Thanks, Ira. Great conversation.